Standard Chartered, we have basically lending for mortgages in 23 countries. So the problem is countries are at various stages of evolution. You have markets like Korea, which are very advanced, a lot of online databases, online valuations. So you have from that extreme to someone like Zambia, which has absolutely nothing. So the interesting challenge for us was there's really not one sort of right answer for everything, other than basically then developing our own system for all countries. Key benefits obviously is much faster turnaround. I think for us, the thing we want to do was make sure that at least the approval in principle was done quickly. Like some of the other speakers here, the challenge is then getting from approval in principle through to final approval. That still takes time, but we're working on that. Where we have obviously positive credit bureaus, where we have online valuation potential, we can do that second step, but that's very much dependent on where the industry is and where the country has evolved to in terms of its back office infrastructure and government support for that. It's there. I don't think we focus on it necessarily as starting from the customer end. We actually, although one of the presenters did that today, we actually looked at it from the internal side. You know, what's going wrong? Where are the disconnects in the process today? And rather than sort of trying to do step-by-step evolution, fix this, Six Sigma or any other re-engineering products, we actually said, let's start again. Let's build a platform that will actually provide us across the 23 countries something that can work everywhere. So the challenge for us is probably a little bit different from, let's say, a domestic Australian market, because we have to make the system work in multiple countries. So I think we are doing that successfully. Time will tell. Obviously, as I said, the more advanced market like Singapore, Korea, it will be much quicker adoption than the smaller countries where they don't have the bureau support infrastructure. I would say the lending practices in most Asian countries are probably not as strict as somewhere like Australia or South Africa, for example. It's coming, privacy acts are there, but we probably have more ability to do things in the Asian markets than Australia. I mean, one thing being obviously we have positive bureau versus negative bureau, which means we can actually pre-approve an offer without any need of any documentation, because we can, once we know what your income is, at least a proxy of income. If you're a deposit customer, we may know your income. If you're a credit card customer, we know your income. So we know what your debts are in the bureau. It's very, very easy for us to make a pre-approved offer. So lack of regulation has helped us, or let's say more bank-friendly regulation has actually helped us get one stage ahead of Australia, I think, in that. I think for me what was interesting was I thought Australia was well ahead. I'm finding out not so. I think there are areas you're probably ahead. That would be in the standardization of some of the operating processes and the links is sort of standard definitions. You're ahead on that. I think you're ahead on linking up the brokers with the banks. But in many other areas in terms of use of online appraisal databases, use of credit bureau, more use of cross-sell. I haven't heard people talk about how do we cross-sell mortgages to existing customers. It's been all focused on how do we get the new customers in. And I think in today's market where there aren't the new sales, the focus has to be on how do we cross-sell existing customers, particularly for the bigger banks that have huge deposit base or huge card base of customers. It's the challenge for us, at least, at Standard Chartered, and I think we'll be here, how do we cross-sell the mortgages in a seamless way?